What's up, guys? Just give me 1 second. Get started in a minute. Just lower the background music a little bit. How's the microphone? I haven't been on a stream in a while, so there's always the chance of me getting 10 minutes into the stream before realizing that my mic isn't connected. So quick sound check would be helpful. We'll get started in a minute or two. I'm just doing something right now behind the start screen. Hopefully everyone's doing well. You can hear me. Good. Hopefully nice and clear. Yeah, like I said, we'll get started in a minute. I just shared the link on both of my Twitter pages. How are we feeling right now? Bullish, bearish, short term, long term? Yeah, thanks. It's been a little while, so. Where the fuck is... Excuse me. I'm looking for... Just bear with me. I promise this will be up in a minute. Pretty bullish. That's good. Yeah, I think there's a good reason to be bullish. Obviously. I think I'll just quit on what I was looking for. I'll find that later. Save that for another stream. All right. Let's get to it. Ain't nothing to it but to do it. All right, guys. Welcome. It is just after 4 p.m. Eastern Standard Time. I was going to do the stream earlier today, but I had a scheduling error, and then I got into setting up a new platform, so a new stock trading account. I was, like I've said, I'm active in all markets at this point besides trading foreign exchange. I trade futures, I trade crypto. I've been trading futures for a long time now. You guys are familiar with that, but I think I think I mentioned this during the last few streams. I started trading stocks again, so in particular single names, equity options. I was trading Nvidia pretty actively. Had quite a nice play into earnings with that ticker, and I got tired of being on, well, trading actively intraday on Thinkorswim. There's a big difference when you have direct market access versus being routed through someone like Citadel. So I went ahead and signed up for Clear Street, and I've been using their Dash trading platform, and today I was spending all my time configuring it. So for anyone who signs up or sets up new software, rather, you know what kind of pain in the ass that is to get everything configured in a way that, you know, suits your trading, everything linked, you know, all your order presets. That can take a couple of days. I mean, depending on how much time you have to sit down and do it. But I was occupied doing that as well. Anyway, I don't work for them at all. This is not a shill, but it does offer direct market access. You're not getting routed through Citadel. So if you're looking for high-speed trading, it seems to be one of the better options. And also in terms of accessing borrow, so for shorting stocks, I think it is probably the premier option to go with. They do offer, so you can trade options on it as well, but the difference is that on a platform like Thinkorswim or Interactive Brokers or Schwab or any of these major all-in-one platforms, those might be better to trade options because you're going to get everything. And when I say everything, I mean just the Greeks, and even just getting a breakdown of implied volatility by strikes. Because what I noticed is that on ClearStreet, it's a great platform, but when it comes to actually trading options, it doesn't even have the Greeks. It doesn't even have implied volatility, which is kind of weird. But yeah, anyhow, a lot of day traders, a lot of people who trade single name stocks, believe it or not, they use options rather than actually buying shares. So I shouldn't even say believe it or not, because you guys are probably familiar with that. Anyhow, all right, let's get started. So first and foremost, if you're not subscribed, I understand. Bet you didn't expect that. I understand, because I don't stream consistently. It is the summer. I thought I was going to be taking off longer. And I don't mean necessarily taking off just from streaming. I mean taking off from even sitting at the desk and paying attention. Felt like I had about a month of that. But here we are. Volatility picked up. And, you know, sometimes the market could be dead for a really long time. And you have to understand that that's the right time to sit on your hands and not sort of bleed yourself out during that period. And you have to be able to identify that period from the periods where it's worth sitting at the desk. And for the last 72 hours, it definitely has been worth sitting at the desk. So when you get fat pitches, you got to be there to take, to swing at them. So here we are. So I don't do this consistently. I plan on getting back to doing it consistently once the fall comes around. But anyhow, hit the like button. Also, shout out to the sponsors, Bybit. If you can't KYC, you can't trade there. But if you can KYC, I think it is one of the best exchanges to trade on right now. They offer a DEX as well. The link below, tradebybit.com. It still offers upwards of a $30,000 bonus. That depends on how much you deposit, how much you're trading, obviously. If you don't want to trade on the exchange, completely understand. If you do, go ahead and use that link. I have worked with other exchanges before, namely Phemex. I still think Phemex is a great exchange. I know Phemex is releasing a token. I think there are some links still down below that might give you access to a bonus, and that's not KYC. Anyhow, before I get into it, does anyone have any questions? This is going to be a pretty casual stream. We're going to touch on current events, what my high time frame bias is, how I'm trading in the short term, and we'll wrap it up. We'll try to do some kind of AMA. I'll look over the chat right now. Bullish midterm. No, I didn't trade Nat Gas back in the day. Jeez. Nat Gas will rip your head off, though. Loved your tweet regarding sold call spreads, 34, 35. Yeah, you know what? I was affected by Cochrane. I'm not. So anyone who knows me now, well, for anyone who knows me at this point for some time, understands that my area of competence is trading BTC, ETH, and if there is momentum across the market, so there's broader market momentum, being sort of a Momo trader in alts. But I don't really dig into the specifics when it comes to alts. I do think that they're all kind of in the same basket, and that's just a basket of garbage, and they are levered BTC. As the bull market picks up, as euphoria picks up, more people will buy into the narrative and buy into the the individual stories, the fundamentals, quote unquote. But I do think that it's all kind of garbage. I've been around multiple cycles at this point to see how things have risen, how they've fallen, the stories that they've leaned on, and how those have very quickly fallen apart as soon as prices gapping down, and as soon as and how quickly rather people jump ship that were sort of extolling the virtues of the project based on those said fundamentals, et cetera, et cetera. So when there is broader market momentum, that's when you'll see me play alts. It is kind of how I used to trade single name stocks back in the day. I'm just trying to identify where the market is. That sounds silly, but skate where the puck is going. Where are the most eyes? Where are the most ears if you're using aggro tape? Where is most of the attention in the market? Obviously, you are going to make a lot of money if you are able to spot the places where the market attention will shift to. But I try to be where the most trading is taking place. That is where you'll typically find the best type of conditions in terms of volatility and in terms of liquidity. So it's a kind of a simple filter for me. You'll see people use sort of the, what's it called? Like the spider charts, the multiple charts in compare tool and identify sort of the fastest horse. I do that from time to time. I will just filter based on volume. I'll filter based on ticks, filter based on volatility. There's a bunch of different ways you could do this. You'll see most of the time where the volume is, where the open interest is, and in particular where there is a significant change in the velocity of open interest. A lot of the times you don't even have to look at, like, I know people created platforms that are great for scalpers. Like they filter based on tick changes and 5-minute volatility, 20-minute volatility, all that. I mean, you could pretty much see that when you filter for those and see what is the most active over the day, it's usually where most of the volume is, period. So like Pepe, that is something that I've been trading actively, very actively. It's not a small alt that is going to lead to an insane amount of upside, like as if you're a trader who's able to spot, or more of an investor who's able to spot something when it's like sub 100 million market cap. But that's how I trade. So I'm looking at where the activity is, or trying to identify where most of the activity is. If I could sort of see a theme taking place and see a shift taking place, I'll try to position for that. But primarily BTC and ETH. Yeah, so anyhow, so STX, I got in position. There was really not a lot of confidence behind the position, it was only on technicals. And what he said was enough to spook me. And I'm happy to like shoot first, ask questions later, and go with something like that, as silly as that sounds, as Adam, who's a very smart guy. Most people don't understand that Adam is actually a very successful trader, not just a guy who writes threads. He said that, and it was enough for me to realize, like, okay, yeah, you don't know anything about this project. You're just buying it based on, positioning and technicals. And those things can change rather quickly in this market. The market doesn't move as fast as stocks do when it comes to any kind of breaking issue or news. But either way, I get out of the position. So recommended broker. I mean, if it's 10K TD, most high-end brokerage accounts like the one I opened, you have to have a minimum of 30K. Use order flow and high volatility. Yes. You don't need to rely on it as much during periods of high volatility. When the market has some zip to it, I'm not really leaning on broader positioning the same way I am as I am just kind of trying to follow flows. And that sounds kind of silly because you could, when you talk about order flow, you might group together the consideration of open interest, things like funding. Sort of people use CVD and footprints, and when there's high volatility, I rely honestly, as it is, more on the tape and price action. When there's high volatility, like when the periods where the market is really zipping, and it's not necessarily that you need to focus too much on everything all at once. You just kind of have to be in sort of rhythm with price. Okay. Minute of the credit crisis. Okay, Levitas. Levitas is good, but I think Amber Data is better. Okay, let's see. If you find a BTC option with a wide bid ask, it doesn't mean that you can't quote within that. So I would just try to quote within that, see if you get hit. Or use some kind of RFQ request for quote platform. But if you're trading on like Bybit and you see that if you see that like the spreads are really wide, which it is, like Bybit's a difficult platform to trade options on. I think it'll get better as time persists and as more people use it. You'll see that there's pretty wide spreads. If you see, for example, 110 bid, 120 offered, there's no reason why you can't quote within that. Sort of putting it out there to see if you could find a counterparty. Okay, no, I don't use CVD and TV. TradingView doesn't have level 2 data, so it's just based on ticks. So you'll see like there are indicators. I'm going to get into price in a second, just going over these questions. You'll see that there are like homemade indicators on TV that they're attempting to replicate actual order flow derived indicators, so like CVD. So CVD actually needs to be calculated by delta. And this is something you could access if you have level 2 data. You could see how much volume is actually hitting the bid, how much is actually hitting the ask. CVD on TV, I think it just goes based on very low time frame, like a tick chart or a 1 second chart, and whether or not the candles are green or red. So you could have a green candle, and you could have a red candle, and you could have the opposite delta. You could have a green candle on negative delta, you could have a red candle on positive delta, and those would give you two different those would have two different effects, honestly, on CVD. So you would normally have a positive CD if you have consistent positive delta. You'd have a negative CVD if you have consistently negative delta. Let's just say it's persistent over time. Whereas you can have a positive CVD on TV because there's green candles, but the underlying actually, there were more sellers than there were buyers at that location if you had level 2 data. So it would be misleading. Same as like liquidation tools for TradingView, liquidation indicators. Those are usually based on some kind of measure of velocity over, some measure of velocity. So if, on the 1 minute chart, price moves 300 points in a matter of seconds, or not 1 minute, less than that, the idea would be that, you would know that that's a period of either lack of liquidity, stops being blown out, or liquidations. And I think TV, the assumption is that those are just areas of liquidations, because price moving that fast is usually what happens when someone is liquidated. Anyhow, let's get into it. I was looking at, so real quick, just big picture. We had obviously the most incredible amount of FUD over the last year. This is a bear market. It is relentless. It is overwhelming, and it will leave most people, especially newer people, feeling like that it's the end, right? That this market is going to be banned. It's going to be made illegal. Crypto's going to zero. This market gets really violent to the upside and really violent to the downside, and the emotions that come along with that are in proportion to the moves that you get as well. So you got to pay the cost, right? Now, usually this market is the best poker table to play at because it is the easiest poker table to play at. It's a great, best market for traders. One of the best ways to put it is if you're trading legacy markets, it's like $50 found on the sidewalk, right? There's not going to be, if you leave $50 on a city sidewalk, and I think you and Sinclair said this, it's going to be picked up pretty fast, right? Way more efficient market. If it's not picked up, maybe there's dog shit on it or something. But you could expect that money's going to be picked up very quickly. Now, the crypto market it's $1,000 on the sidewalk. No, it's not. It's $1,000, but it's not on the sidewalk. It's in the middle of a highway, right? So by just being in this market, you think, most people who are comfortable with it think, well, wow, there's so much to offer in this market. You can make so much money. And it's like, yes, because you are taking on a ton of risk just to be here. So you're jumping into the highway to get that money. Over the last couple months, it's been as if the traffic is picked up in the highway and the money value in the center of it went down. So it's been kind of worth it to trade other markets up until this point. It's been a ton of FUD, and it seems like the SEC is coming down really hard on every aspect of this market, waiting for the other shoe to drop with Binance, whether or not the DOJ does anything. And then out of nowhere, we get an announcement that BlackRock intends on opening or starting an ETF, right? There's argument over whether or not it's an ETF or a trust. Just it's an ETF. It doesn't make a fucking difference in terms of how it affects the market. So their hit rate is like, I think they've only been unsuccessful once out of 565 ETFs put out. So there's a lot of theories as to why they are doing this. They feel like they're not going to be doing this randomly, right? It's like Apple releasing a product. They know that it is going to be successful. And now you see a lot of other entities following suit as well. And it's almost as if the market went from being complete, rain clouds and storms and treacherous seas to now the sun has come out. And wow, that's weird how that happens. But it isn't really, because this is always going to be what happened in this market. It's not going anywhere, right? The market is only growing over time. There's a ton of volatility, yes, but it has been moving up and to the right, whereas equities might do this and be boring and move up on, the VIX is 14. The crypto market does this, right? Crazy peaks and troughs, but anyway, up and to the right overall. It's a young market, it's growing. So they're gonna be those legacy incumbents that want a part of this market, but there are crypto native incumbents that control this market. It's kind of like they need to be decapitated to some extent for those entities to feel comfortable. And I guess what it means is they're comfortable now. And I think it also is an indication that maybe they think that Gensler's crossing the line a little bit. Either way, the market has interpreted this as very bullish, and we've had some very significant moves as a result. I think in the mid to, I think almost across all time frames, maybe besides the very near term, this is bullish. I mentioned this about a week and a half ago. There was some significant size that was coming through in the options market. If you look at block trades, specifically 35K strike calls, 40K strike calls going all the way out to December. Really significant size, like meaningful size, very smart entities. I actually end up, I have the benefit of having some friends in the right places when it comes to some of the bigger desks and getting this information other than just going on Amber data and seeing it after the fact. And these people were kind of spooked by the size that was coming through, and is an indication that, the coast is kind of clear in a sense. We'll just look at this market to begin with. If we go all the way back to, if we just look at SKU, for example, which is we're looking at 25 delta. So we're looking at the difference between calls and puts at those deltas. It's kind of give you an indication of where the market is kind of reaching for upside or buying insurance. And where is it? Why is it not loading the longer term? There we go. So we were pretty flat, negative most of the year. And this is the most extreme positive value that we've had so far. So there's been a significant amount of call buying. Some theories as to whether or not the writers of these calls, so options market makers, have been helping this move up because they have to hedge those deltas. They have to hedge that by buying the underlying, so sort of adding if they are short gamma. We're not going to get into that. I'm not a options streamer, although I've been trading options now for quite a long time. Going all the way back to when I traded stocks, when I traded single names, but I am not by any means a galaxy brained option trader. Like when it comes to Delta One products, futures products, it is night and day in terms of the level of maths and level of sophistication that is in the options market versus just the futures market. Either way, this has been interpreted as a very positive event by the market. Just looking at the big picture, yes, I left that on. So I've been long. I was anticipating we were going to tap 23.5, and we didn't get it. So when we didn't get it, and we started turning. Pretty basic stuff. I've been trading this way for a long time now. You guys should know that. When we reaccept within a gap, if we fail to continue, so if we have some kind of breakaway move into a gap, price stalls, and we see open interest come in, and that positioning is caught offside, once we're trading back within and remaining bid above those prior levels that were supposed to be the floor, quote unquote. So leading up to this, we had sort of a multi-week floor right around 25.7, 25.5 region. So as soon as we poked within this prior structure, so going back to, this was almost a year-long range, right? No, not year. We're talking going back to June of last year. So we broke that structure. I mean, that is kind of the make or break area. That's where you're anticipating either a really nasty move or a pretty big trap to set up as people panic into that. So when we broke into that, I was anticipating that, yeah, we're going to get some kind of nasty liquidation structure into that, and I'll try to bid that and get a better entry. If anything, if we're going to get long, you're waiting for at least that to happen. And instead of that, price broke down. We accepted back within the structure and had sort of an under over. So I talk about this a lot. You know, when you get a structure like this, consolidation, finally break from that consolidation, it's a lot easier for the market to move back through this level if you've stalled and reaccepted within it. You know, you've taken out stops. You have sort of those orders that are attached now to anyone who's short. So breakout shorters have their buy orders here, stops above. There's just a lot less sell pressure in that structure now that's been taken out. You stop longs out already. You know, you've put more capital on the sidelines to get add to position if this reverses. So the best kind of structure is, you know, the under over, ripping above, retesting the high. You got that over here. But, you know, under that is something worth paying attention to as well, which is this kind of structure, right? You're looking for the rejection at that level. So immediately at that sort of 25.6 level, looking for that to fail. It wasn't the most compelling short from here when we retested it very quickly. So you have a very brief move below. It wasn't like you had a big nasty spike and then a bounce that occurred all the way back to the level in short time because the book cleared out, right? And you have this very illiquid, you know, scattered price movement after you get the retest, and then you're starting to continue on down. Instead, price just immediately stalled, and we saw that if you just look down on this in the low time frames, you had a pickup in open interest down here. There's quite a CVD divergence as well. So if we go down and look at sort of that trap, or trap after the fact, what happened down there, going all the way back here, you could see sort of, gotta break down the time frame a little bit. So you have pretty much a flat bottom, and your CVD, your perp CVD, continuing to trade lower. So just aggressive selling down here, open interest going up, risk coming into the market, positioning coming into the market, and we ended up squeezing that. And I didn't get long off of that because you could just squeeze that and then resume down. But when we started basing out within the structure and remaining bid, that was my sign to get long, and I ended up longing somewhere right within this candle. And that was spot positioning, and that's positioning that I still am holding, and I intend on holding. When it comes to positioning and open interest, absolute levels of positioning are not necessarily important. It's the rate of change. So the rate of change in positioning, so absolute positioning over time, so when you have like a gradual ascent of open interest, that's not really that significant. So the velocity of open interest is more significant. When you have a very sharp increase in positioning and open interest, that's when really, you know, if that's at a major contextual level, if that's through a significant level, that's when it's worth paying attention to. This can be a sign that, you know, there are sellers coming in and confirming a new trend and getting behind it. But as soon as you put that positioning offside, so regardless of whether it's buyers or sellers, we know it's both within here. As soon as we're on one side of it or the other, definitively, then you could make a case for a trap and a further squeeze and some kind of unwind away from there. That should be pretty violent. So, I mean, this high time frame, because it's been a while, we'll go to something like the Coinbase chart. Well, let's actually go to like an all-time index. So one thing to point out, it's not something I talk about frequently, but it's because this is very infrequent. This kind of structure, we had to sell in May and go away. That's great, right? Ended up having, for the month of May, I think total drawdown was almost 15%. We ended up closing at about 8% down for the month. This is the consolidation at the most significant level on the chart. So again, for those of you that were watching a long time ago now at this point, I ended up talking pretty negatively about the market when we were right here, saying that this was not an area to get aggressively long. This is where I was hedging. This just being an area where I had described as a sticky point, right? Not an area I just want to blindly long into. There's a bunch of, shit I got for that, but then we ended up having a month-long drawdown. So it was not for no reason. It was just, this obviously was a very significant level. I'm not going to buy into that on the first test. It's the right area to actually just start managing risk. So a big move down over the period of a month, but it was kind of a grind. A lot of people that were saying the market was sideways and we're grinding and chopping. We weren't sideways. We were actually moving down. So moving down, and structures like this, whether it's to the upside or downside, where you have sort of these gradual, marginal higher highs or higher lows, and higher highs and higher lows, or lower lows and lower highs. When you don't take any of the last local highs, you just kind of set up a region of stops, right? A bunch of invalidations on the way down, people comfortably sort of dragging stops down. That sets up for a really violent move back in the opposite direction. So you always have to be careful that you're not shorting a hole in this situation, because it's very easy for this to rip back when there's been really no structure created and then left, right? It's not like we had consolidation, breakdown, consolidation, and you're building on the way down. It's kind of, like I said, just been kind of melting down. So that level was not an insignificant level. Now, think of it from that point of view now, but making a case for, well, think of it this way. That level is so significant. We struggled off of that level, grinded down. We're unable to break into this gap. Held what was the next most significant contextual level on the chart, multi-month range breakout, almost a year-long range breakout. And now we're all the way back at this level in very short time. So it took us all this time to grind down, and in a week's time, we've done away with all that price action. So if you're going to put in that kind of work to move this down, and then buyers are able to just rip this back up, again, this is a combination of short squeeze, a ton of spot buying though. This is on the back of really good news too. On the monthly chart, it's not engulfing. I mean, it isn't engulfing. You haven't completely engulfed that consolidation, so it's not like this is a break from balance and a range breakout if we look at this as a range. But I think this is like decent for getting involved prematurely. So if I wasn't in position and I just arrived to the chart right now, I would say I'm buying this. That's the best way I could put it. Even though we are still back at the level that I said was very significant, I think the fact that we're back there like this quickly stands for something, right? You're on the highest time frame too. You're showing kind of every kind of allocator that they can get in position based on signal. This is not a 5-minute move. This is not a move on the intraday structure. This is a big move. This is a trend-changing move from the looks of it. And whether or not that ends up, so we really have never had this happen without us being higher over the next couple months. So that's the best way to put it. I mean, it happened here. You had that kind of immediate throwback. We grinded around and then popped up. Happened here, immediately continuation. The only times it's really happened have resolved in continuation. And I think it's, we take this in consideration from a structural standpoint, historically, from a statistical standpoint. It's brief, it's not like we have a lot of history, but the history we have is relevant. In the bigger picture, legacy markets moving up, new all-time highs, individual names, part of the NASDAQ and that lead the NASDAQ and lead the ES and the S&P, or the S&P more specifically, ES is a futures contract. I can't, why would you be bearish, right? I understand where things can drastically change and that we've done this quickly. We've seen how this market can move both directions very quickly. But I think in the short to intermediate term, whatever that means, midterm to the end of the year, I think you could be optimistic, right? I think you could be optimistic. I mean, this is, I've gone back, this is going back to like last June, where I said that the end of 23, into 24, I think that 24 will make a new all-time high. I've said kind of countless times, I think the halving is like the thing you could lean on the most. It's the most reliable narrative this market had. And now we have big legacy names getting involved in this market. It was inevitable, but yeah, either way. So big picture, I think that there's good reason to be bullish. On the short term, there's a couple things to point out. This was a good amount of squeezing that took place, but at the beginning of the move, we go back to we look at sort of a little bit earlier within the move. It's not as relevant now. This was pretty heavily spot driven. Now you can see that this CVD I have on right now, this is just Coinbase. So this is just Coinbase. This is the US session. If anyone was around during last bull market, you remember very well sort of microstructural detail that early within the week, New York session, there's a pretty obvious New York TWAP. So desks that were involved in that time, buying BTC, that was a really good driver of flows, and you don't want to fade that kind of entity. So we had that presence quite obviously going back 2 days ago, day before that, and it was really pronounced. Like if we look at, this is on Okotoki. I think this platform's awesome now, by the way. I'm a big fan of trying out new platforms and seeing how these developers come up with sort of new details and sharpen everything, and everything's finally becoming awesome in its own way. But in particular on Okotoki, this thing was like this. So what I have it from left to right is I have Coinbase, I have Binance Spot, OKX Spot, and then we have Binance Futures, we have OKX Futures, and we have Bybit. So the best kinds of moves off the low would involve, and these are, the way I have it set up, by the way, is aligning by levels. So we're able to see who's pushing, who's pulling, right? Very obviously, who's trading at a discount, who's trading at a premium. And Coinbase Premium was really pronounced. I think it was like $100 above. I think it was like $100 above. Yeah, I love trying new platforms because I've said many times before, like crypto, there's no, trading legacy is different. You're trading either through the CME, through the NYSE, through the through the Nasdaq, and there's like very obvious platforms that have been out for a really long time. They're all relatively good. Again, whether or not you want direct market access or really low fees, that's where you'll find a difference, versus paying like you'll be on maybe a big name brokerage platform and you won't have any fees, but you'll have to be routed through pay for flow, right? You'll be routed through like a Robinhood, you'll be routed through a Citadel or a Virtu. Whereas you could pay, you could go through like a platform like Clearstreet or a Cobra, and you're not routing through them. So then you're paying per individual share. Maybe you're paying like, for 1 basis point. You get the idea. In crypto, so many different exchanges. So some platforms connect to some exchanges, some don't. Some platforms have this tool, some don't. Very rare that you find something that has it all. And I think more platforms are getting towards that now, where each of them do have it all kind of, and they might differ in terms of quality of information or even aesthetics. It's a big thing too. So Coinbase was trading at quite a premium. You had limit chasing taking place, very aggressive replenishing of the bid on the way up. It hasn't really been there the last couple days. I think what you were seeing up here and what we're going to see, this thing is locally going back to April. This is the most important level at the chart, this high, or it was. We ended up taking it out, looking at perps, looking at spot, took it out on both venues, on Coinbase, on Binance. I think this is the most obvious area where you have people that are going to say, okay, this is where you're going to get some kind of deviation, some kind of trap set up. I don't really see it developing yet on the long side. I haven't seen it. It doesn't really look to be the case where longs are getting, ahead of their skis. I think that it's a reasonable area to expect some kind of chop, some kind of pullback that's not too deep. I mean, if you look at the last 3 days, we have this imbalance move, but range high was basically right around 30,600. You have an impulsive move through that. I wouldn't really be concerned even if we came back and traded within this range and maybe take these lows again. I would just treat this as a decent range to trade. If you had another chance at this long down here, looking for that to develop, I ended up longing this. I originally shorted, shared that positioning, then long this. I'll go over that in a second. But I think what this ends up doing, because the market doesn't look ahead of itself right now, I think that you do chop around. Maybe you start building up some short positioning, and then they just force this through, maybe in a couple days. Who knows when it could be. But I'm not really too worried about this in the sense that normally I would look at this if it was in isolation. You look at a move like this, and you have kind of a weak looking structure, right? Some people are talking about this. It doesn't really give you much of an entry. It's not building structure on the way up. Well, that's really how crypto moves most of the time, honestly. I mean, if you've been trading this market long enough, you know that it's in a textbook, you get some kind of pullback, you know, your TA books buy the retest, but you just don't get that in really reflexive markets, especially on the back of news, especially on the back of positive catalysts, especially after it's been suppressed for this long. You know, someone's going to reach at these prices. And, you know, what you want to pay attention to is things like those microstructural details, like that New York TWAP, because you know, that very well could be literally one desk between the hours of 10 a.m. and 12 a.m. saying buy all the BTC you can and then turn it off. So I always advise, like, if you see something like that you might think is becoming a pattern, just mark that off and take that period of your day to observe price during that period. Because a lot of times you could get that opportunity just based on something like that, you know, riding sort of the wake of a larger entity. I mean, that's momentum trading. That's trend following, you know. So as far as this, like where we sit right now, I mean, normally you'd look at this structure, say, it's possible that a structure like this isn't built properly. The danger is accepting back within these lows. You know, here's your anchored VWAP from the beginning of this move. So sort of from BlackRock ETF catalyst, where the risk is isolated, I think that honestly, as long as we're above like mid-range, so where things changed really right here, because you have this little range, this melting period, and then this quick reversal. As long as we're holding like 28 to 28.5 region, this zone, I wouldn't really see any cause for concern. I don't even think, honestly, I don't know if we get a pullback like that. This is the kind of structure that reminds me of one that just kind of builds up at the high, builds up enough short interest, and then that spot buyer that hasn't been active in the same way the last couple days can just come back into the market and force it. And, you know, use that sort of momentum ignition, those conditions. From an open interest standpoint, again, open interest is rising. If we look at just locally, you had a wipe, just back out a little bit. Open interest is rising overall. I think more importantly though, you know, like I said, it's not your sort of absolute levels or your overall levels. It's more or less like the rate of change of positioning that's really important. So that is that. I mean, this perp CVD at the high right before that squeeze, quite an obvious divergence. Let's see. This long, by the way, so this is a pretty simple long for me. So I was short here, flipped long, and I shared this trade on Twitter, so it's not like I'm sitting here bullshitting, or, you know, playing this by hindsight. But this was a period of sideways activity. This was the first day really into this range. We had a buildup of OI, and we just had a wipe back down to the base. So a lot of times what you'll see is OI will kind of ping pong within a range on its own, so you get kind of an idea of the upper and lower values of positioning for the new positioning that comes into the market, where you're sort of getting people crowded, where that threshold is for them being sort of exhausted and out. So for this, it was really just, and you could look at open interest delta, so the change in open interest, it was really just buying that flush. So buying that flush, first move below the lows. Very rarely do things reverse, you know, especially on positive news, reverse on the first day. So trade back within the gap and then break down. So instead, that's usually where a trap develops. So it was a really easy long. All right. Let's see. So BTC, I do think this is an area where, again, opening fresh positioning might not really make sense. I think that if we're going to consolidate against this thing, we have a breakout. It might be a breakout worth buying. There's a good chance that there's quite a significant amount of calls sold above this level. Block trades that took place between 30 and 33. So there's a good chance that there is some short gamma that's built up, and that your options writers and market makers end up adding to this volatility by buying and hedging if price continues to move further up. So same thing you see in legacy markets in individual names as well. So I think that breakout could be quite extensive, but until that happens, I would just be mindful. This thing probably pauses for a little bit. I would look at possibly, if we end up coming down here and taking these lows again, for another sort of opportunity to buy this sort of single print region. So it's the single prints are actually down here, little singles right there. So we violated this singles, and we have another little series of prints. I'm not looking at a TPO chart, but all you have to do is look at a 30-minute bar chart and see where there's no overlap. So a move that ends up taking these lows, again, catching people offside below here. Look for some try to sort of trap to develop. Your sort of anchored VWAP is right around that region. That might offer another opportunity to get long. Again, as long as we're above this level, I think that we're good. Obviously, worst case scenario, any approaching of these lows again is a really bad sign. Because again, you do have not much there other than treating this as a very significant level because of all that previous structure. But this was a gappy move up. Same way this is a gappy move up. Not a whole lot stands in the way of them on the reverse. So as far as ETH goes, I shared this chart the other day. It was a catch-up chart. Catch-up and then the chart of ETH. I think that's kind of what ends up happening, honestly. I know ETH doesn't really have the benefit that BTC does in terms of narrative right now, and the BlackRock ETF, I think it eventually will. But what I see is ETH is lagging. If you look at ETH BTC, making a move back down towards the lows of this range. I think anything that comes down here, you want to start paying attention to that. I think, honestly, anywhere, so high, low, sort of mid-range, anywhere in this lower portion is an area where you want to start looking at ETH. As it is, I mean, ETH on the monthly, same sort of, this is a, I don't know what kind of candle you call that, but a complete reversal of the structure, engulfing almost of this entire range before. This is a very obvious pocket. So this structure right here, so above these highs, there's not a whole lot that stands in the way before 2145. So I just think that chances are that this is going to catch up and end up following BTC. It always does. But I mean, if you're more comfortable waiting for it to come back down and get that ratio to get stretched a little bit more, I completely understand that. In terms of like lower time frame trading opportunities, again, I think that the direction overall that you want to be siding with, because the flows are in this direction, is just long biased. And you know, normally at a range like this, I would say, you know, this is clearly from a distance, very strong move, look to fade it. But the last time we really had a move like this with BTC, where you grinded down and then ripped up to the most important level on the chart, was actually all the way back here. So you guys remember this. We stalled for a little bit, but it was a really extensive move through the same kind of melt. And it's the reason why the move happens like that, again, because this is just marginally lower highs. So there's stops and a bunch of liquidations, and stops are blown out, positions are closed out, and you get a really violent move back through. A move that completely, so anytime the price is really struggling in an area, buyers and sellers are duking it out. Anytime that you really do away with all of that work in a really short amount of time, it just says a whole lot about who's in control. So the same thing over here. I mean, fought it out, really fought it out tightly over here. Breakdown, you're expecting some kind of continuation, but if anything, move is easier back in the opposite direction because of all that fuel that's built up here. And once you've stopped out longs enough, you put future longs into the market, right? You stop out a long, you got someone on the sideline. Other things that I'm focused on, actually focused on GME again. So the movie coming out, what is the movie called? What is the Dumb Money? Something I think I'm going to start paying attention to, just because maybe we sort of see a retail pump leading up to that movie release. NVIDIA obviously representing AI as a whole. I mean, the AI bubble I think is going to be massive. I don't think there's really anything that represents it yet, though, besides the mega caps. It's not like we haven't had any IPOs, any unicorns come to market. It's not like crypto where retail has better access to them. Other things I'm focused on, as I said, Doge. I got into position in Doge just because this seems like the best risk reward you're going to get. If things go south, they really go south. But otherwise, I mean, if we're looking at the market, a market that is going to experience either sideways or upside in the next couple months and more favorable conditions, I think that this is obviously the best area to buy Doge. And I don't think Doge is going anywhere. I just think that Pepe is possibly becoming the new favored meme token, sort of nonsense token in this market. Doge obviously around longer, but you know, this is the fastest horse right now. Pepe is the fastest horse, so I'd keep an eye on that. I mean, you can see that the spot is still trading above futures, so what else? Been live for what, an hour now? Let me go look back through the chat. One sec. The landscapers are here really late because it was pouring today. See if there's anything I'm missing. I'm just thinking, is there anything I'm missing? I mean, honestly, the way this structure is right now, if you had a TPO chart, it might be a little bit better defined. It's a pretty obvious retest of this 2-day range, right? High, trending move, very imbalanced move, first day of balance, retesting the high of that structure. Like I said, this is probably a good area to look for, the first area to look for some kind of shift in control. If sellers bring this down here, for them to get offside and possibly another long down here. But that being said, I mean, if we start trading back in, what is that, Wednesday's range, we end up losing this low, I think maybe you have a quick short opportunity back down to the origin of this move. So yeah, that squeeze up, I mean, a lot of times we have seen this where you have a build-up positioning and you just reset it. So this is your short positioning here. We end up squeezing that out. That's open interest right there. Bring it back down slightly higher than the last baseline, but pretty much flat post this move. So squeeze, flattened, and this is kind of the lows of open interest up here. So it's not like it, there might not necessarily be a whole lot of fuel for this right away. Like I said, you want to build fuel up. So it might, in the short term, might make sense to look for very quick short opportunities if they stand out, right? If they're really obvious, if they're glaringly obvious. Otherwise, I think it just makes sense to look for the better long opportunities. I mean, we squeezed out shorts significantly. It looks like we weren't finding anymore. Just looking at liquidations trending down. Haven't really seen many long liquidations. Open interest is up. So it's both sides, remember. But another big short squeeze. Futures doing most of the work with this buying. Spot market, Coinbase selling into it. So it might make sense in the short term to play for sort of a little bit of mean reversion. You've had more call selling. So if we look at, we just go to Paradigm block trades, 30K puts bought, 1,125. Sold 30K calls, right? Buy calls. Looks like selling a call spread. Long calls. These could be part of the same structure, but listed separately is always, I guess, the chance of that. 28.5 puts. Sell 40K calls. That's December. I mean, there was a lot of buyers of those, so you'd have to actually break these down and look at the open interest change. But I think that, again, if the market's able to get above 31, it's a different story. You might see some of that hedging lead to a much larger move, but it looks like that 40K call, those 40K calls that were bought for December were ended up that they're sold, because you can look at the open interest drop. So I think it makes sense that you get some kind of pullback up here again. Wouldn't be aggressive up here. If you're already in position, I don't know if it's necessary to micromanage it if you're in good position. If you bought right around 25, 26 even down there. No, I'm not trading on Binance. I just look at Binance charts because it has the TV open interest integration. Yeah, I don't know. So about alts, I mean, I feel like every cycle this gets said, but I think the emperor has no clothes after the last cycle when it comes to alts. Like again, no real product development, no real use case has come out. Just exchanges and yield protocols and Ponzi's, honestly. So I don't know. I'm not a good enough person to say. I'm not good enough at spotting the next 100x. So I'll leave that to someone else. But I think they eventually catch up. I think alts, select amount of alts will. But I think, again, like prior cycles, most of them will just become irrelevant and you'll have a bunch of new ones. And I hope you have a bunch of new ones because you don't want to use the same narratives of the last. So anyhow, I think I probably will wrap it up. I just wanted to get back on here and get a stream in. If you're trading stocks, if you're trading futures, I mean, the VIX is at 13. So the expected daily move off of that. So if you want to get an idea for the expected daily move for a market, take a square root of the trading days. So I think it's 256 in legacy. So you get around 16. You divide the VIX, so the at the money, implied volatility, S&P, by 16, you get sort of an implied daily move, what the market anticipates. So it looks like just melt up season. So, I mean, it's tough to enter if you want to get long. I mean, this could just, for anyone who hasn't been around a while, the entire way up for the S&P is mostly just grind up, pull back, make everyone feel like the bottom is going to be blown out, and then grind up, small pullback, and then that just on repeat. And we've had periods like that where volatility has remained really low, and it just never gives you a really solid entry until it's too late. But in the next streams, I'm going to be opening up the other platforms during the session. So we'll have the legacy platform open, the tapes. We'll go over everything live. That's it though, guys. Be sure to check out the links below. There's a few links below. You get your pick. Use what you like. Use what you trust. And yeah, I think that about covers it. Thank you for tuning in. I appreciate you guys being patient. Sometimes I say I'm going to stream more, and I don't. I have a daughter now, and that's my priority. Yeah.